G'day folks, welcome back to another update for gold, silver, the US dollar and Bitcoin. It's the 23rd of July 2024 and we're seeing silver and the US dollar showing a bullish divergence, Bitcoin showing a bearish divergence. So just be wary of those if you're going against those divergences. Also, don't forget to hit that like and subscribe button and support us more on the Patreon page where we look at weekly bullish shares. Looking at the heat map first off, you can see there in the middle column there, we've got gold and silver and the US dollar still predominantly bullish on the monthly, Bitcoin still bearish, but the opposite's true for the weekly and daily. They're all bearish predominantly, with the US dollar and Bitcoin bullish on the daily, plus some other instruments for your reference should you wish to trade those. First, looking at gold, we've got the monthly still showing a bullish trend on the above the CCI there, that above the moving averages. But we do have a long-term bearish divergence between those lower highs on the CCI versus higher highs on the price. So just keep an eye on that, and that's going to take a while to play out if it does indeed play out. Of course, the CCI could keep rising, in which case it'll invalidate that bearish divergence. We've also got the weekly bearish divergence. You can see there lower highs on the CCI, and that's actually broken down into a bearish trend on the CCI below its moving averages versus higher highs on the price. And again, just be careful of that. We've drawn a little target area there, and that correlates with the Fibonacci range between that point there and that high there. Actually, that would have been that first point there, and that also correlates with this daily chart. So that goes between the 23 and the 38% level. If I show you on the daily as well, that's actually broken down into a bearish trend as well. We did have initially a target set for this point here, and that would have been this first bearish divergence, those lower highs on the CCI up to that point versus high highs on the price. And then we had a move to the downside, and it just kissed the 23-38% level. You can see that wick just broke into that area, and it bounced from there off that support at 22.86. Now we do have a secondary bearish divergence, which I've drawn this target area here, and that goes between that point there to that high there, which is lower high versus higher highs on the price. And so if we draw a Fibonacci, again, going back to this point, to that more recent high, you can see that it's now coming back and about to enter into this 23-38% level a second time. So that, just keep an eye on that. Now, if we go to the 1 hour charts, and I've got here the daily chart as a reference, so we only take short trades, and this actually aligns with a bearish divergence. So take only short trades when you see the CCI break below the moving average. And in this case, you would have taken short trades there. You would have got out of it there. So again, preparing to take another short trade once this CCI breaks below the moving averages. And again, we also had a bearish divergence here on the hourly chart, and that also broke down and hit our target. In this case, it broke a lot further to the downside. And this case would have been Fibonacci retracement. It's that high. See, that's a 23-38% minimum target. In this case, it's bounced off the 61% a couple of times, and it's finally broken through. And we may see further declines. The CCI is starting to drop again, so we'll just keep an eye on that, and that could drop a lot further. Here we have silver. On the monthly, it's bullish above the moving average range, and there's no divergence showing on silver. On the weekly, it's bearish. It's broken below the moving average, so we might see further declines in the coming days and weeks. Again, there's no bearish divergence or bullish divergence on the weekly. On the daily, however, again, that's also bearish with the CCI below its moving average. And we did have and still do have a bearish divergence. The CCI is dropping versus those highs on the price, and the price is now starting to decline as well. We did draw just blow that up. We did draw a target area there, and that would have been from that low to that high. You can see there's a 23-38% level, and that's a minimum retrace. It bounced into that range, went sideways for a while, bounced a bit, and now it's starting to drop again in accordance with this CCI dropping. If we go to the daily and hourly charts, again, using the daily as a reference, we would have taken short trades from this point on the hourly. Now this one has gone sideways for a while, but you would have taken a couple of short trades there. One there, closed it out when it enters the moving average range. Another short entry there. And at the moment, we've got a bullish divergence on the CCI, higher lows versus lower lows on the price, and it's probably starting to bounce already. And if I was to draw a Fibonacci between that low and that high, you can see there that's between that 23 and a 38% level. So expect that to, if it does start rising from there, that's where the minimum target range will be. So we might, again, to invalidate that, we need to see the CCI start dropping off and invalidate the divergence. Looking at the US dollar, on the monthly, it's still bullish. It's above the moving average range there. And I've drawn a bearish divergence here, lower highs on the CCI versus higher highs on the price. And again, this is a very long-term bearish divergence. You can see they're going back, starting back at around about 2017 and still playing out with the CCI dropping off. On the weekly, we do have a bearish move on the CCI below its moving average, and the price is pretty much going sideways. No divergence showing there. And on the daily as well, we've got it's broken up actually into the moving average range, giving us a potential neutral to bullish signal. And that was after it hit this support at 10.321. But again, this did show a double top there on the price, but also on the CCI. That was giving us a bearish divergence, and it dropped into that range there. And this one fell a lot further, bounced up to that resistance at 10.575, and it's dropped again. So again, this is somewhat neutral to bullish at the moment. Just wait for it to only taking, if you're trading on the daily, take only short trades based on the weekly. Going to the hourly chart, you can see they're using the daily as a reference, only taking long trades, and that would have been from around the 19th of July, so only from this point on. Wait for it to break above, plus this also helps with the bullish divergence on the CCI versus lower lows on the price. We might see further rises there. You can see there it's bounced off that 50% level, and at the moment it's moving sideways. So we might see it go a lot higher, but also the CCI is starting to potentially weaken. So don't get too cocky until we see the daily CCI break above the moving average range. Bitcoin showing a somewhat neutral to bearish movement at the moment on the CCI, and it's hit this area up here, and I haven't drawn a support level there, but that's around a 73,800. That's on the monthly. On the weekly, it's broken below the moving average range and making a bit of a rise at the moment. So it was bearish for a number of weeks, and there's no divergence there. And on the daily, it did have trouble breaking through this resistance at 71,950. It's broken down to the 56,566, and it's bounced from there, and currently sitting around the 68,480 mark. And that's showing a bullish movement on the CCI above its moving average range. So using the daily as a reference, we only take long trades on the hourly. So if we go to the hourly chart, again using the daily as a reference, we only take long trades. It would have been from around about the 14th of July. You can see there the CCI was dropping off, but the price kept rising, and you would have taken those long trades. But again, just when you see the CCI drop, always be wary, because eventually you are going to see, in this case, a bearish divergence. You're going to see a price drop. Now, in this case, it kept rising. The CCI is still falling, and from this point, it seems it's reached its peak, and we might see it pull back. And I've drawn this needs to be updated. If we pull that Fibonacci to that level, and then remove that target area, that'll be our new target area, assuming it starts falling from there. So you've got to adjust these Fibonacci's if the price still rises in the same direction as it was before, like in this case going long. You need to readjust the Fibonacci. So long as the CCI in this case is falling, we still consider it a bearish divergence. So if you got value out of the video, hit that like and subscribe button, hit that notification bell, support us more on the Patreon page, and I'll see you in the next video. Thanks for watching.